Dear clients, it's good to see you, even if it's by video. And I hope everybody's been vaccinated, or if not, you are in the process of getting vaccinated. We're all getting back toward normal, and Randy and I, for example, are flying down to Chapel Hill later today just to get away to see a spring football game and a lacrosse game, and really just to change scenery for a while. So I wanted to come to you just on an informal basis and give you a little update with respect to President Biden's leaked suggestion yesterday that he will increase the capital gains tax rate, which is at its highest today at 23.8%, to ordinary income tax rates. There was an article in the Wall Street Journal today talking about it. I'm going to look at that for a second, just for headline purposes, for your benefit. If he did what he proposed, the capital gains tax rate returning to ordinary income tax rates would mean it would be at a federal level 43.4% for federal, and of course if you were in New York or in California, when you added in state income taxes, which are in double-digit figures, it would be 55%. In Delaware, you'd have to add another 6.6% to the 43.4, or in round numbers, it would be exactly 50%. So every dollar that you earned in capital gains tax, 50 cents would go back to the state of Delaware and to Uncle Sam. So what do I think the chances are of that passing as is? Pretty limited. So I think we shouldn't overreact to that proposal. I think it's the first step in a journey that will probably see the capital gains tax rate, which is now favored, move up from 23+% to maybe 30%, something like that. I think the bloom is off the rose with respect to the honeymoon that President Biden has enjoyed. I think moderate Democrats now are starting to realize that they have some power in this administration. Obviously, there's no Republican who will support that kind of a tax hike, and so I think you needn't worry about it too much. You saw yesterday when that proposal was leaked that the market tanked. I'm sure President Biden wants to take credit, whether it's due or not, for what the market is doing, and he won't want to see it continue to fall. The other thing you should be aware of is that the president has said that he only wants to tax the rich. He wants to increase income taxes on only those who make $400,000 or more. But remember, plenty of folks own stocks in retirement accounts and in their own individual names who earn less than $400,000. And if the market sold off, they would also suffer. So I think this is a tax trial balloon. I think we will see more tax trial balloons dealing with the estate tax, dealing with proposals to raise that rate, dealing with proposals to drop the exemption amount, and most importantly, dealing with the elimination of the step-up in basis. Again, those are all proposals. We'll just have to wait and see how they play out. I don't think the progressive wing of his party will be able to persuade him to hold the line on all of those any more than I think they will be able to persuade him to hold the line on his proposed effectively doubling of the capital gains tax rate. So enjoy yourselves, relax. Washington is a sideshow as always. It's better not to get your stomach in an upset over what's going on there. We'll deal with whatever it is for you in the most tax judicious way possible. I think you know that. We're watching it every day, and the main takeaway for me is what I started with, which is let's just get back to normal. Let's start playing golf again. Let's travel again. Let's see our loved ones in faraway places. The taxes will take care of themselves. We'll deal with the issues however they play out in your best interests. And with that, I wish you a wonderful weekend. Thanks.